Okay, welcome everyone. Today we have Ellen Brinkard from Agricorp going to talk through risk management program. But we also have Debbie Brander from Agricorp, Elizabeth Morris from OMAFRA, and then Jack Chafe will be explaining a little bit how they do the RMP on their operation. Please use the chat function if you have any questions, and I'll be able to stop Ellen and hopefully get your questions answered. And then at the end of the presentation, there will be another period of time that you can ask your questions for our panelists here tonight. We have a good assortment of people, and hopefully we can answer all your questions you have here tonight. So I'm going to pass it over to Ellen to start her presentation.
Perfect. Thanks, Evan. There we go. We'll just, there. Can everyone see that presentation now?
Yeah, I can see it.
You can see it? Okay, perfect. Thanks, Evan. Thanks, Evan, for the introduction, and thank you to Beef Farmers of Ontario for organizing this webinar tonight. Excited to be able to come on and talk to you guys about the risk management program. Just before we get started into the presentation, just a question. We've got a poll question set up just to see, for those of you that are on the webinar, are you enrolled in the RMP for Livestock program currently? So we're going to run that poll question just quickly to get a sense of that, and it'll just help again as we go through with some of the questions and to make sure we touch on the right level of detail for you guys tonight.
So Ellen, it's being shared there. So 48% said yes and 52% said no.
Okay, perfect. So we're a pretty good mix then, about half and half for in and not, so that's great. So we'll get started with the presentation, and as Evan said, we'll go through, and if you've got questions, you can ask them as you go, and we'll go from there. Sorry, I'm just trying to bring back up the presentation now. There we go. Sorry about that. Me and technology. So as we said, most of the presentation tonight is going to be about the risk management program for livestock, but just wanted to sort of start with a little bit of an overview of Agricore and some of the other programs we do deliver. We've got the production insurance plan, AgriStability, as we mentioned, the risk management program. We've got the provincial premises registry, grain financial protection program, the beef cattle protection program, farm business registration, and the farm property class tax rate program. So Agricore is a Crown corporation who delivers these programs on behalf of the government. Some of the programs here that we've got, we talked just a little bit more detail about, are some of the bigger ones that may be of interest to you guys in the livestock industry. If you are concerned about cash flow because of low market prices, increased costs, or market backlogs, you may be thinking about some of the business risk management programs as a whole. So we've got a little bit of a description here around some of the other ones. Our website is also a really good source of information for any of these other programs. We'll have some links throughout the presentation as well, with some good sites for some information sheets. But for production insurance, it compensates for crop-specific yield reductions and production losses, covers for factors beyond your control like adverse weather, disease, wildlife, or insect infestation. A lot of which of those perils are covered will depend on the plan. We've got insurance programs that go for forage to corn and soybeans, to fruit and vegetables, so quite a variety of plans there that could be of interest. For AgriStability, programs like AgriStability can help with the unexpected when that affects your farm income as a whole. which is why the last few years, for this year, sorry, 2/3 of the agri-stability payments processed have gone to livestock producers. We are still in the process of processing 2019 files, but for 2018 agri-stability, beef producers received over $16.5 million. So definitely that's a program that's available and to be considered, with lots of information on the website. Agri-Invest, whole farm, small declines in net income. This one is again covering risks beyond your control, and those funds can be used to make investments to your farm business. And then the one we'll spend the most time talking about tonight is the risk management program. So it compensates, again, commodity-specific financial impacts of margin losses and falling prices or rising input costs. So tonight, when we talk about the risk management program, we're going to talk about the way the program works today. We're going to talk about some eligibility criteria, as well as some requirements around reporting and dates and things like that. So the risk management program, it helps producers manage risks beyond their control, like fluctuating costs and market prices. It is provided by the provincial government, and Agricore delivers that on contract. As you can see from the slide there, it comprises a range of plans. There's a plan for grain and oil seeds. Under the livestock plan, covers cattle, hogs, sheep, and veal. And then there also is the self-directed program and plan there for edible horticulture. So the risk management program started with a pilot for the grain and oil seeds from 2007 to 2010. It was introduced then, and it was designed to offset the low commodity prices that grain producers were facing at that time. So the grain and oil seed risk management program became a permanent program in 2011, and then livestock followed there shortly after. The risk management program for livestock, it was designed in consultation with representatives of the cattle, hog, sheep, and veal industry. Again, it works like an insurance to help Ontario producers offset the losses by fluctuating commodity prices and production costs. And producers pay premium based on their insured production and chosen coverage level. So we'll talk in a little bit more detail in a couple of slides around what insured production means and the coverage levels that are available. Around the coverage levels, originally when the plan was designed for livestock, we had 80, 90, and 100% coverage. But 95% coverage level was added in 2019. So that was an additional fourth coverage level that was added as a cost-effective alternative to the 100%. So we will, in a few slides again, we do have a slide that shows the 2020 premium, so you can get a sense of what we're looking at there for each coverage level. Program funding. So RMP payments are funded by the Ontario government. It covers both payments to producers as well as the administration costs. Each sector covered by RMP has allocated a portion of that government funding. There was an announcement this year that the funding had been increased from $100 million to $150 million, starting with the 2020 program year. So as of the 2020 program year, the beef sector is allocated $28.5 million. So this additional funding provided added support for farmers facing financial challenges due to COVID-19. When that announcement was made, the application period for the 2020 program year was reopened. Normally, the application deadline would be April 1st of the given program year, but given the announcement and the additional funding, that was reopened just to make sure that any producers who were eligible and interested had the opportunity to enroll. So that was extended until July 30th of this year, 2020, and we ended up with around 140 new applications this year for RMP livestock, and that was compared to around 80 in previous years. RMP premiums. So enrolled producers are required to pay a premium each year. Premiums are based on your chosen coverage level and that insured production that you select. The RMP premiums from the livestock are collected by us, by Agricore, but they are managed by the Farmers Risk Management Premium Fund. So that Farmers Risk Management Premium Fund is made up of cattle, hog, grain and oil seeds, sheep, and veal commodity groups. So that they use that, or is used by the industry, and they determine when those payments are made, and it's basically as a supplement to the program payments in years when producers need it most. So again, there is a link there and some really good information on our website around the Farmers Risk Management Premium Fund. Agricore, our role with the Risk Management Premium Fund is we provide payment management, customer service, communications and reporting services. And for 2019 program year, just to give you a sense of the payments, we processed just almost 6,500 payments for a total of 26.3 million from the premium fund. So the commodity groups, like we mentioned, they manage that fund and they do decide if and when payments are made. So that group is comprised of the Grain Farmers of Ontario, Beef Farmers of Ontario, Ontario Pork, Ontario Sheep Farmers, and Veal Farmers of Ontario. Okay, so we're going to spend a couple of slides here looking at RMP for cattle specifically. Each plan underneath the livestock, each plan underneath the livestock plan has their own sort of set of eligibility and requirements. So we'll look at cattle specifically, obviously, tonight for this group. So when we're looking at eligibility, enroll all your eligible head within a category. In a couple of slides, we'll talk about the different categories that are available and what you can enroll in, but you don't have to necessarily enroll in all the categories, but if you do enroll in one, you do have to enroll all of your animals. So kind of the same as our production insurance plan, where if you're insuring corn or soybeans, you do have to insure all your acres of that crop. You don't have to insure both corn and soybeans, but whichever one you do insure, you do have to provide all your acres for insurance. Another eligibility criteria is to provide a premise ID number, be able to demonstrate ownership of the livestock for a minimum of 120 days. Eligible head must be 30 months or less. Breeding stock is not eligible except in the cow-calf category. And we'll talk about that again when we start to talk specifically about each category. And the eligible head must be sold during the program year. So for the requirements, when we talk about selecting a category, the categories that are available under the cattle plan are cow-calf, backgrounder, and feedlot. In the next slide, we'll talk about or look at the weights for each of those categories so you have a sense of what we're looking at there. But those would be the three options for the cattle plan. You need to select a coverage level, so that 80, 90, 95, or 100%. Determine the insured production. So we'll talk in another slide about how we determine that insured production at the start of every year. You'll be looking at things like age, weight gain, sex of the animal, breeding, and days of ownership. Pay premium and report sales. And we do have some examples of some sales report forms and some of the deadlines around that coming up in a few slides as well. So these are the weights for those categories under the cattle plan. So the cow-calf plan, no payment for calves under 350 pounds, but for covering in the calf, we are covering for steers up to 550 pounds and heifers up to 500 pounds. So if you were keeping replacement heifers in this category, this is where you would be paid for those once they reach that weight, and then they would be no longer eligible for backgrounder or feedlot. So if you're keeping cattle though, and you're finishing them right through to a finished weight of 1,400 or 1,500 max for steers and heifers, you could be eligible under all categories: cow-calf, backgrounder, and feedlot, depending if you raise them from birth or purchase them in as backgrounders. So the weights are there. Again, we're looking at cattle over 30 months. They're not eligible. So there is, when we get to the sales report form, there will be spaces to indicate some of that information as well. So this again sort of outlines what we're looking at for those categories. And cattle in this example, so a calf that was born at the beginning of 2020, if you're raising that animal from birth all the way through to finished weight, those animals would be enrolled in the 2021 program for when they're going to be sold as fat cattle. So in that sense, again, a producer can choose where they feel their risk is throughout that period. If they want to cover in each category for all of the weight gain from the 350 pounds as a calf all the way to 14 or 1500 pounds, depending on steer or heifer, or if they feel that their biggest risk is only in the backgrounder category for that specific portion of weight gain, you can just cover for that as well. So the payments are triggered and are issued for all categories in which you're enrolled when cattle are sold if market price falls below the support level. So there are calculations and formulas in place so that if that calf was born in 2020, but you're not actually going to be selling it as a fat steer until 2021, there are calculations and formulas in place that based on the date that you sold that fat animal, it will do a calculation backwards to determine if the market price in that week you would have sold at the top of the backgrounder weight was below the support level for that week, then there would be also a payment in the backgrounder category. So estimating insured production, this is one that we do sometimes get some questions on around how do we do that. And so what this example shows here is in the cow-calf insured production, you're looking at the number of calves you have. So in this example, there's 60 steer calves and 20 steers that would go on to be fattened into the backgrounder and into the feedlot categories. So the 60 steer calves would be sold off at 500 or 550 pounds, and they would be eligible for a payment during that period if the market price fell below the support price. So you would register the 80 head for the cow-calf as far as insured production. In the backgrounder category, those 20 steers that you're not selling at the calf weight, you're going to continue to feed, they would be eligible for the weight gain in the backgrounder category. So they start in at the backgrounder category at 550 pounds and go up to 900. So 350 pounds of weight gain per head on the 20 steers gives us the 7,000 pounds that you would be insured for total in the background category. Similar calculation in the feedlot insured production. Again, those 20 steers, they come in at 900 pounds into the feedlot category, finishing them at the heaviest weight of 1,500 pounds gives you 600 pounds per head of weight gain that you'd be eligible for coverage on in the feedlot category. So the program does have some built-in flexibility. We do know it's difficult, obviously, to predict the production and the weight gain and how quickly you're going to put that weight gain on at the beginning of every year. So we do have the premium adjustments in place. So what that means is what we refer to them as is the year-end premium adjustments. So following that final reporting for the year, once we've done the final payments and the final reporting has come in and we've adjudicated the files and we've made any applicable payments for the year, it's usually sometime in April that we do these premium adjustments. So what we look at is we look at determining the difference between what you insured at the beginning of the year and what you actually produced. So for these adjustments, when we look at the difference, if the difference is 5% or less, there is no premium adjustment. We know that that's just natural sort of fluctuation in your operation. If the difference is between 5 and 25%, those premiums are automatically adjusted at year end. So there's nothing that you need to do additionally as a producer. That's something we would do on our end and look at every year at the end of the year. So if the insured production has increased, we would be sending you an additional invoice. And if your insured production has actually decreased from what you had at the start of the year, there would be a premium refund sent to you. If the difference is more than 25%, so from what you insured at the start of the year to what you ended up with at the end, actually what we ask for is that as you go through the year, if you know or as soon as you know that you're thinking you are going to be more than that 25%, we do ask that you contact us just to let us know, because what it does is it helps us ensure that the payments are calculated correctly and issued timely so that there's no holdup in any payments if we notice a huge increase or decrease in what we're expecting as far as insured production. And then the other part of the program is obviously the reporting of your sales data. So to know, again, what weeks you've sold those animals in and whether the market price was below the support price. There is a sales report form. I've got an example of it in the next couple of slides here. But these reports can be submitted online, mailed, or faxed in. There are pre-populated forms, so those will be, we do mail one to you for each of the reporting periods, or you can, if you're part of our online services, you can log in online and do that form, download it, fill it out at your convenience. You can save it, do it in a couple of different times if that's best for you. Save it and then submit it that way for us. So sales are reported each quarter, April 30th, July 31st, September 30th, and January 31st. That's for backgrounder and feedlot. For cow-calf, those are reported and paid on semi-annually. So cow-calf producers, they report their sales July 31st and January 31st. So we do have an example here of the cow-calf as well as the feedlot and the backgrounder category on the next slide. So with the sales report, well, basically you would be, if you're doing one that's blank, but these would also be pre-populated if they were sent to you with your policy number and which period you're reporting for. The one thing that's of interest there is there's a box that says I have 0 sales to report for this category. So we do ask that you report even if you have 0 sales, because what that does is it allows us to push you forward to the next quarter so that it doesn't look like anything's outstanding and you're ready to go for the next task. If you do have cattle to report, we've got a spot there for the sale date, the gender, the number of head, the average sale weight, if they were sold as breeding stock, and the point of sale. The backgrounder and feedlot sales report is very similar. Again, if it was a pre-populated form, if you were already enrolled with us, you would have that period selected for which quarter you were reporting. Again, we would ask that you report if there was 0 sales for that quarter in one of your categories. And then again, the sale date, the gender, the weight, sold as breeding stock, number of head, point of sale, and then again, the part that's different on this backgrounder and feedlot form is the breakdown of the sold animals. So again, when we talked about the categories that you can register in, if you are raising these animals from birth, obviously there would be a calculation backwards for your backgrounder and your cow-calf category payments if applicable. So we need to know how many you're raising from birth, how many you purchased, and if they are cattle that you purchased in, maybe you're just a backgrounder operation, you buy them in at 700 pounds and finish them. That's what we'd be looking for: the number you purchased, the purchase date, and the average weight when you purchased them. So for payments, RMP payments are issued for your sold cattle when the average market price falls below your support level. Payments are based on the difference between that support level and the average market price. In each category, the average market price, support level, and payments are calculated separately. And we do make payments 3 times a year, twice a year for cow-calf, as we mentioned. So typically payments are made in September, following the first and second quarter sales, and then December and March. And again, we have really been encouraging producers to sign up for direct deposit. It does allow you to get that money into your account 5 to 7 days faster. It's fast, it's easy, secure payments, and we've actually seen some really good uptake in our direct deposits the last few months. From March actually to the end of November, we've had just over 1,200 producers sign up for direct deposit. And just as a comparison, that was compared to about 480 customers in 2019. So definitely seeing lots of producers take advantage of that option, and it's great because, like I said, it does allow us to get money in the hands of those who need it as quickly as possible. Again, when we talk about payments, there's interim payment rates. So the annual government funding is available through the RMP program. And what this interim rate does is it ensures producers who trigger payments at different times of year have equal access to the funding. So we use an interim payment rate to calculate these payments. And as the program year goes through, that interim rate may be adjusted. If we do adjust that payment rate throughout the year, you will receive an adjustment on your payment. So what would happen is let's say in Q3, if there was an adjustment, they would also make an adjustment to your Q1 and Q2 at that time. So there's again a really good information sheet on the website that just talks about how those payments work and those interim rates as well. So when we're talking about payments, the calculation periods are important for sure. So for the cow-calf category, those payments, as we mentioned, are calculated twice a year, and the market prices are calculated twice a year as well. So that's from January 1st to June 30th and July 1st to December 31st. So that's where our reporting dates for those two line up as well, as far as reporting your sales and then receiving payments. For backgrounder and feedlot, the payments are calculated every week. Both the support levels and the market prices are calculated weekly. So obviously they will vary from week to week depending on the fluctuating commodity prices. The support level and the market prices are based on the reported date of your sale. So again, it's very specific to the period that you sell those animals in and what that market price compared to the support level is during that week. For important dates, just to keep in mind, these are the typical dates for the programs. As I mentioned at the start of the year, we did have some dates for 2020 that were extended. So definitely keep an eye on our website as we go forward and start to plan for the 2021 program year. But typically in a normal year, whatever that is, April 1st would be the date to submit your completed application or make any coverage changes. So for producers who are already enrolled, you would receive a renewal package from us, and that would be sometime in February or March typically. And you would then be able to make any changes to your insured production for the year, coverage level selections, etc. April 30th is the date to report your sales. July 31st, you can pay your premium and report sales. For paying your premium, you do have the option to pay it in one installment, July 31st, or you can pay semi-annually, so 2 installments. So you would pay one installment July 31st and the other January 31st if you chose that option. And then you would report sales again for the third quarter, October 31st, and January 31st for the fourth and final quarter of the year. So we just added in here as well a few participation numbers. Participation in the cattle plan and really in the risk management program for livestock as a whole has been pretty consistent over the last few years. So for 2020, 668 registered in cow-calf, 1,011 in backgrounder, and 758 in feedlot. Now, this is obviously, you would, if a producer was enrolled in both all three cow-calf, backgrounder, and feedlot, they would be represented in these numbers 3 times. So when we look at unique producers that are enrolled in the plan, for 2020, we've got 1,192 producers enrolled, and that is the highest out of 2018, 19, or 20. And then we've got time for questions here, but I'll flip just to this last slide really quick before we go back. This is the one I had mentioned. We did have the premium rates in here for 2020. So these are the 2020 premium rates. So there will likely be some changes for 2021, but just wanted to show what you're looking at there. And you can obviously sort of compare that for your own operation. But one of the examples that we've used in the past, so if you've got 50 cows and you're raising those animals, those calves that they have from birth to finished weight, and you're selecting 100% coverage. So you've got the highest coverage level and you're raising them from birth to right through to the end to that finished weight of either 14 or 1,500 pounds in steers or heifers. If we assume a 50-50, 25 heifers, 25 steers, you're looking at premium, you would have been looking at premium for 2020 of $1,916. So that gives you a little sense of what premiums would look like there. And again, you have the choice if you're raising them from birth to finished as to which categories you choose to participate in. So I'll flip back over to questions, and I believe Evan, and we're going to pass it back to Jack, and he's going to give some information from his experience as well.
Yeah, there's just one question here before I flip over there.
Sure.
In the RMP program in the oil grains and oilseed side, it actually does show when the premiums come out and whenever they come out in the spring. They also do show the support levels. Will that ever be eligible for the livestock sector as well? Because that might help pick up of the program if producers may know if what the support level is. I know there is a little bit more fluctuation there because of the buying and selling and crop prices as well. It impacts the formulas. That's just my question to you, if that's ever going to be a possibility for beef producers to see.
Yeah, for sure. I think you're right. You hit on a few points there. Because they are calculated weekly, it does obviously make it a little bit different than grain and oil seeds. And those support levels are actually determined by OMAFRA. So Liz, I don't know if you have any insight on that. Obviously, like we said, the weekly would be, it would be hard to do, or more difficult than grain and oil seeds for sure, but.
Yeah, thanks, Ellen, and thanks for the question, Evan. I think we are looking at the programs right now. We're kind of, I think, continuously looking at the program, but the minister has directed us to kind of take a review to make sure they're effective. So that is something that's come up in terms of, as you say, kind of putting it out there so you know what's covered. The weekly dynamic does make it difficult to share it. And in the past, at least certainly back in 2011 when we launched the programs, there was some concern by the commodity groups about releasing those for sort of trade risk reasons and having those public. But I think that's something we can take back and consider how or if there's a way. Ellen, if I'm not mistaken, when producers get their payments, so when you get your settlement, that does indicate the support level that was received. Like in addition to the payment rate, it does show what your support level was. Is that right?
Right, yeah.
So again, that is after the fact. So I know that doesn't really help someone making a decision for the first time, but there are certainly, the information does get out there. So if you've been in the program for a little bit, you probably have a pretty okay sense of how it works. And there might be ways for us to work with the BFO perhaps in facilitating sharing some of that information for prospective participants in the meantime.
All right, thank you.
Yeah.
I'll pass it on to Jack now.
Okay, hello. So ask me just do a few sheets here on things we do on our farm to track our cattle for the RMP program. And Alan, I thank you. That was a great presentation. I was writing down a few questions, and every time I got one wrote down, 2 slides later, you answered it. So I don't have any for you right now, but anyways, thanks. So a couple things we use here. So Beth's got up our cattle shipping form, and basically we use this once, if we would have had cattle go to market yesterday, December 2nd, we fill out the date and then what pen they come out of and the lot number. So in this example I'm using, they come off our slotted 4 barn pen 3, and there was 2 different lot numbers in there, which I'll get to that in a little bit. The rest of this doesn't really mean a whole lot for RMP. I guess the destination, if they would have went to Cargill Meat Solutions or St. Helens, that gets filled in there. Number of head. I don't have a line on here, but after the grade on the cattle, if 1 comes back as an OTM or 2 or whatever, I always write that on the sheet because those cattle aren't eligible for RMP. And Alan touched on that earlier. So that's any of the cattle, the finished cattle that are over 30 months. Do you want to just scroll down, Beth, please, on this sheet? So then down here in the bottom, I've just got a little box for the RMP use. So up at the top there, I had that lot R57, and they were purchased May 15th of 2020, and there was 19 head of them. And then the other lot was the C0520, and they were purchased May 20th of 2020, and there was 21 of them in that shipment. You can just scroll down to the next sheet, Beth, please. Actually, just go down one more farther and then we'll come back up to this one in a minute. That's good, thanks. So it actually doesn't show those cattle on here because I haven't completed this yet, but so this is a spreadsheet that we use to keep track of our cattle bought and sold for the RMP. So on the left-hand side here has all our purchases. This one, the only reason I have this one box blacked out is because that's who we've purchased the cattle from, and I didn't want to share that on this webinar. But so we do finish some cattle in Western Canada. So those cattle are not eligible for RMP. So those, you can see there's a darkened out line there, and it has finished in Western Canada. So that's just a reminder for me that those cattle never get entered in RMP. There's also another down here, you can see October 25th, 19. You go across 92 head, purchase weight, and they went into a custom feeder in Manitoba. As those cattle came out, so they can't be entered into RMP until they come back into Ontario. So the date they came back into Ontario was, I have it in that next slot there, January 27th of the 2020, and the head count and the average weight. So if you want to just slide back up, Beth, and then I can, we'll have to go to this other one here. So then on the right side of my screen, it's just basically we keep track as I move those cattle from the left side to the right, and I place them in order. Off to the right would be, if you can see at the top there, the February 18th of 20th, there was 68 head in that group went in on feed. And my weight on them was 853. So far there was a shipment of 17 out of that lot that I've entered in RMP. So I've got used 17, there's 51 eligible to continue on. So it's just a little spreadsheet that I've developed to kind of to help me keep organized on which cattle we've used in RMP and which cattle we haven't used. I know we've done a couple audits, and this is very handy to go through and match up with my bots and solds. That cattle shipment form, once we get our returns back from wherever the cattle went to market, whether they were sold live or went on the rail, it's stapled to our sales invoice. So all that information just is held together. So Evan just asked me to pass along what we use here. Works well for us. Actually, there's one other column here. I keep track of my OTMs because I mentioned before that we can't put them into the program. So it's essentially make sure you keep track of them as well. So I think that was it, Evan, that I had to share.
All right, thanks. I don't see any questions in the chat. Beth, did you get any questions through the other function?
Nope, not at this point.
Must have been a good presentation then if there's no questions. So I guess on that, I would like to thank all the panelists.
Evan, I'll ask one question then, and maybe it'll spur on a few more questions. So I think, Alan, the one part you said that the date of sale on rail cattle, though, the date of sale is the week that they go to market. And that's the week or the date that gets recorded on your sales sheet, correct?
Right.
Okay, because I know there's, from time to time, there's a backlog here in Ontario, and it's actually not the week you sell them, it's the week that they go to market is it works into the calculation.
Right, yeah, and like you say, it would depend again where you're selling them, but we would be looking at that, yeah, that day that you actually sell them so that we make sure that we're comparing the right week of support level and market price.
If there isn't any questions, I know these answers, but I'll ask you, so where do you determine the support price from for, say, fed cattle to start with, and then work backwards?
Yeah, so we do use BFO, Beef Farmers of Ontario market data to do that. As far as the weeks go, you know what, I'd have to pull it up, to be honest, and maybe you know that off the top of your head better than I do, but Liz, do you have that by any chance up with you? I can look it up quick too.
This is why my staff are better at this than me, because Jen Stevens did the top of her head. But it is often but yeah, I'll have to check that. There's a number of sources that go into that support price, right? So It's kind of comprised of, I like to think of it as 3 components. One is feed costs, and I think most of them are sourced by something, a source through Ridgetown. And there's a mix of components, I believe, but that's done on a weekly basis. There's cattle purchase costs, which I think is Canfax data, if I'm remembering my role in 2011 correctly. Yeah. And then the third component is yardage, which is that figure, the yardage figure is set for the year for each category, and we use AgriStability participation data to come up with yardage. So yardage is basically everything else that goes into running your operation, building, fence repairs, that kind of thing. And then actually I misspoke, there's a 4th element that is built into that support level, which is a return to labor, which is basically attempting to sort of pay or cover your own labor costs for running your operation, for raising those cattle. And that's derived from some Stats Canada data in terms of what I think a skilled machinery operator divided by a number of head, that to try to get at a representative size of operation. So sort of a number of elements. Some of them are static for the whole year, and then again, the feed and the purchase are sort of live. They're calculated every week, backdating to when you would have purchased that animal and then fed it and then sold. Does that sound right, Ellen?
It is, yeah, and there's a good document actually on our website as well that talks about the support prices and like you say, some of those details that we don't always remember off the top of our head. But yeah, you're right, Liz, there's lots of factors that go into it, both static and live.
And then it is that your coverage level changes what that amount is. So if you choose 100%, it's an amount. If you choose 95% coverage, that support level goes down accordingly as you go down. Most producers choose the 100%. I think most people see value in that option, but it is dynamic depending on your coverage level as well.
And the document, if anybody is looking at, sorry, go ahead.
I just had questions come up in the question section, Evan. So if you don't mind, I'll just read them off here.
Yep.
So I actually had 2 come up. So one was, can you give a sample 35 head cow-calf, or sorry, say 15 steer, 15 heifer example. Is it possible to put a sheet up and walk through the example? So I think the person's asking, do you have like an example that you could put some numbers in?
My technical capabilities, probably not sure I can do that. Is it like you want to know like premiums on them or coverage? Like what are you looking for on that 15 head? Just walk them from the start to the end? Because we've got the premium slide then, right? So if we looked at that premium slide, so if you had 15 steers and 15 heifers that you were covering just in the cow-calf category, and definitely type back to Beth if I'm misunderstanding this question for sure, but from a premium standpoint then, you would basically be looking at the premium is the same. So if you basically have 30 head in the cow-calf category, and your premium would be depending on which coverage level you chose. So if you've got 30 head in the cow-calf category, at 100% coverage would be 17 $26 per head, so $517.80 in premium if it was just the cow-calf category.
Yeah.
And then obviously, sorry, go ahead.
So then it's followed up with basically how would this level benefit the person? Like with a 15 steer, 15 heifer like that. I think that amount of cattle is he's wondering.
So again, it would depend on the week that you those cattle reach that weight. So again, in the cow-calf category, you're looking at 500 or 550 pounds. So when they reach that, it would depend on if in that week where they reach that weight, even if you weren't selling them, if you were keeping them for breeding purposes, when they reach that weight, whether the market price was above or below the support price. So if the market price was below the support price, you would receive a payment on those eligible head. But again, like you say, I guess you could look at historical market prices in a week that you would typically have those animals at that weight. But again, it would obviously fluctuate based on the year and the week.
I was going to say, Ellen, we could probably, oh, sorry, I don't know if I'm echoing or somebody else is. We could probably pull together an example slide to circulate afterwards that would, as you say, Ellen, just use kind of a week in 2019 and pretend it happened or something. And I could send that to Beth or Evan or Jack to circulate to folks. We've done that in the past just to show as a bit of an illustration how it would have.
For sure.
performed.
Yeah, we just pull a week and see what it looks like, right? For that category. Yeah.
I think Alan or Elizabeth, I think the average payout on the cow-calf last year was around that $58 if my memory is right. It was somewhere in that range. So your investment of $17 is returned to about 58, roughly, somewhere in there.
That's good information, and that probably helps to the question more so than the example even, right?
And that isn't with a fully funded program. If the program was fully funded, the payout would have been a lot more.
And even I would think, Jack, that may have been the 100 million average, but at the government, there's the additional 50 this year. So I think those numbers will probably change when we look back at it, for sure.
Okay, and the second question here is the sale of home raised cattle to a feeder finance to be retained for backgrounding on farm considered a sale in RMP's framework?
That is a good question, because the feeder finance one that we just, let me have a look on that. That is one I might have to get back to you on. There has to be insurable interest for sure. So some of those feeder finance arrangements and different feeding arrangements, co-ops and things like that, a lot of times we do have to look at that individual situation with our underwriting department. So again, it depends who holds the insurable interest once those animals are sold or change hands. So it could be a price risk or it could be a production risk, depending on who has that. It would be on a case-by-case basis, so kind of hard to give a specific answer to that one, but definitely if that is if you're in that situation, definitely give us a call, because through our customer care center and our underwriting department, they can make sure that they know exactly what your situation is and what animals would be covered.
Yeah, and then I might jump on this question as well. Say if you're in the backgrounding section and then the cattle get to the 900 or 950 and you move them into the feedlot section of the RMP program, are you already paid up when you trigger that into your next category? Do you get the benefit of the backgrounding section before those cattle are even sold at the end of their life?
No, so those payments, if you're carrying them all the way through the category, the actual payment occurs when there is a point of sale. So if you're carrying them over into the feedlot category, once they're sold in the feedlot category, that's when you would be paid for all of that weight gain.
And then another question here: how are the calculations made and adjusted as you move from cow-calf to backgrounding through the year? Do you have to pay cow-calf premium, then also the backgrounder premium once the calf gets to 550 weight, or is the premium prorated through the year?
So the premium would be determined at the start of the year based on that insured production we talked about. So if you have 80 calves and you're going to finish them right through to finish weight, you would that premium would all be calculated based on those numbers, assuming you have that insured production and that weight gain. So the invoices would occur, like we said, July 31st, and you can either pay that in one installment or two. So basically you would pay that premium up front on what we think you're insuring for the year, and then we've got those year-end premium adjustments where we account for any differences in that.
All right, thank you. I guess just double check with Beth if there's any outstanding questions, or are we good?
I've got one here, Evan, that was texted to me and I never even get my number out. So anyways, cow-calf producer insures 100 cows, but he only weans 85 calves. So he insured, he figured he was going to have 100 calves, but he only ended up with 85 because he either cows were open or lost. It doesn't say. So what becomes of those extra premiums that he paid those for the 15 head?
Yep, so that would be in that year-end premium adjustment calculation. So he would be billed if in April when they did the renewal or the application, if he paid that premium on those 100 head in July, on July 31st, when we get to that year-end premium adjustment where we look if he's within that 5 to 25%. Again, if he's only in the cow-calf category, we might be able to do that sooner, but if it is, then we would do those all at the year-end premium adjustments. And again, in that case, he would have gone down, so there could be a rebate of premium for those.
Okay, thanks.
I just got that's green light from Beth that there's no more questions. So on behalf of BFO, I would like to thank Ellen and Elizabeth and Jack for coming out tonight and speaking on the risk management program. I know there's been a lot of questions from our membership about this program, and I'd like to thank you again for spending this evening with us. So thank you.
Thank you. Thanks for organizing.
Thanks, everybody. Take care.